And welcome to another Lumi Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Lumi USA, member of Investment Committee for Lumi Investment Services. Michael, good to have you back. How are you?
Doing well, Zev. Thank you very much. Good to speak with you.
Thank you. You know, you've been on the money. You've been looking at long term and been pretty optimistic. As we're standing here today, what do you see?
Well, you know, Zev, we've been talking pretty much all year long about some of the dynamics that have been in place. And as we sit here right now, if you think about all the bad news that has kind of accumulated through 2020, the election cycle, COVID, shutdowns, etc., I think many people might find it shocking to believe that most of the major U.S. indices and, frankly, most global indices are at or near all-time highs. And I think one of the things that we continue to focus on at Bank Leumi is looking out for our clients' long-term interest, trying to sift through some of the short-term noise and short-term volatility, and staying focused on kind of that longer-term prize. And I think the important thing for everybody to remember is that the market is a discounting mechanism that's looking out into the future. So much of the news items that we're seeing today and seeing on a regular daily basis are well priced into the market, and the market is generally looking out 3 to 6 months.
So, is it too hard to look beyond 6 months, get a prognosis, so we're just able to get ascertain what the next 3 to 6 months will be like?
So that's a good question. And again, let me just remind everybody that the views expressed here are my views, not necessarily those of the bank. But I think what the market is basically saying is everything in the short end, so again, the next 3 to 6 months or so, we're well aware of, it's well priced out. And as we go further and further out there, people will start to make more projections of it. So there's a window where, again, it gets a little bit gray and cloudy. It's tough to assess the next 3 years, 5 years, etc. But I think it's a little bit more clear to try to guess it, generally speaking, what direction we're going, where is the ship sailing. And to use a couple of examples right now, I think the market right now is definitely looking through a lot of the coronavirus issues. Again, the last 3 weeks, every Monday, we've gotten very incredibly positive news from the pharmaceutical companies in Operation Warp Speed. We're hearing more details about what Operation Warp Speed is in terms of where we will expect to see the logistical systems in place to start distributing vaccines. And, whether or not it's the first week in December, the last week in December, the first week in January, the market is starting to get to a point where they're pricing in that we will have some type of return back to a more normal world somewhere in 2021. And again, while we can talk about the tragedies that are happening right now as we seem to be ramping up into another wave of coronavirus, again, the market is anticipating far beyond that and looking deeper into where the world is going. And what we've talked about quite a bit, Zev, over the last few months is the backdrop of massive central bank stimulus, a rate environment that is going to continue to stay low, and then a situation where economic recovery will continue to creep in. You're going to start seeing a steepening curve. You're going to start to see more and more people looking out to find ways to make return in a low-yield environment. And similar to where we were in 2009, people are going to continue to push out on the risk ladder, going higher up the risk ladder to seek a return. And I believe that's very much where we are right now. And I believe we're starting to see some of that in some of the economic data.
I think what you're saying, too, we're seeing an optimism between the reports of 3 vaccines, even though corona may spike, but there is light at the end of the tunnel. I think that the markets respond to that. And also the fact there's now stability with the transition. So I think that also plays a role where things seem to be running on track.
Exactly, and what we've talked about previously as well is that the market generally is very supportive of a situation where you have divided government, and by all accounts, we will likely have divided government. And I think what we're also seeing now is that President-elect Biden will, generally speaking, be moving towards a pathway of cabinet members that he believes he will be able to nominate and get through a process. Many of the names that you see being brought up in a likely Biden administration are names that we've heard before, seen before, have been confirmed already. What I do think will be interesting is not only the gridlock between a Republican agenda in the Senate, where I believe they are likely to maintain control of the Senate, and the House and the President, but also what happens within the House as we kind of try to figure out where the Democrat agenda is between the progressive branch and the moderate branch. And right now, Biden seems to be moving towards his moderate, roots. So I think we have a lot of elements of the worst fears of what a Democrat administration might look at have really been put to the side because of, again, a Republican Senate gridlock and, again, movement of Biden basically tacking back towards the middle. So, again, the market has sniffed a lot of this out. I believe that the market is really starting to believe and understand that there should be more economic recovery happening as we continue to move forward. And again, I understand that there are some lockdowns probably coming across the nation or tighter restrictions over the near term, but we do look out beyond that, and we do anticipate that we'll continue to see longer-term positive growth trends, particularly as there is so much liquidity, so much capital, and so many different elements of people seeking return that, again, the equity markets, in my opinion, generally remain very favorable for a pretty significant period of time as we move forward.
And I don't think we're going to see the same kind of lockdowns we saw previously, so that also, I think, probably add to, despite the fact that we're going to see some spikes, that it won't be as bad as it was 6 months ago, and I think that also has a bearing on the market, too.
Yes, and Zev, I think one of the issues as well is in March and April of 2020, the populace was much more willing to heed the government instructions on lockdowns, shutdowns, and closures. And I think we're seeing a very different dichotomy right now, and you're starting to see more and more elements of where people are just, not in the same mood to have government restrict lifestyle as much as they were earlier. So again, people are wearing masks, people are adhering to rules, but there is a line where people don't want to have government encroaching on them, and I think more and more you're going to see some pushback from people as to saying, what were the rules, what are the rules, and where do we draw that line between me wanting to open up my business and the public health? So again, the government can only control the people when the people want to be controlled, and I think more and more we're going to have a bigger growing view of, we need to continue to move ahead with opening up of an economy, particularly as vaccine starts to be coming on the scenes, as therapeutics continue to improve the survival rate of anybody who does actually get COVID. So again, I think we're continuing to head into a better place. And again, the news stories continue to be extremely negative. They reflect kind of where we are right now and kind of what leads on news. But again, I think that the underlying stories are far more positive for overall economic growth and market returns, particularly as we look deeper into 2021.
Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. Thank you for being with us. Look forward to speaking with you again.
Thank you very much, Dev. All the best to you and your family.
And we're going to be right back. Don't go away. Stay tuned.